Hello and welcome back to another episode of the Investor Financing Podcast. On this episode, we're going to discuss credit scores and DSCR loans. For DSCR loans, it's based on loan to value, whether it's a purchase or rate and term refinance or cash out. So you're getting adds or hits depending on loan to value, if it's a purchase, if it's rate and term refinance or cash out, right? So that's kind of the matrix we use. The big factor is your credit score. If you want to get the best pricing, 740 or higher is typically the threshold to get the best pricing possible. So as an investor, we're constantly using our credit to borrow money on credit cards, on term loans, things like that. So what we've been trying to do lately, and what I do as an individual investor, is I've learned the hard way by racking up way too much credit card debt on my personal credit report. And what happened was I went to 80 or 90% of my credit card utilization, and my scores went from 720 to like a 580 because never missed a payment, but I used my utilization. You get hit just like you're missing payments if you're tapping into your utilization. So I encourage everybody out there to really kind of get a good understanding of business credit and personal credit, what you need to do to get the best credit score. So I like getting tier 1 banks as far as personal credit cards. So like the Bank of America, the Chase, the Citi. Have a few credit cards in your name, use them to 20 to 30% utilization, but pay them off every month. If you're keeping a high utilization, your scores are going to get impacted. Keep your personal inquiries as low as possible. I know that's difficult because we're constantly applying for different loans and things like that. Don't get any, if possible, try not to get alternative finance or tier 2 or tier 3 credit in your name, because that's going to not reflect as positively. So then what you try to do is you try to get a qualified funding entity, as I was taught. And in that entity, that's going to be the borrowing entity. That's a business that's not going to show up on your personal credit report. Now, usually you have to sign a personal guarantee for that type of financing when you're getting lines of credit in the name of your business and business credit cards. But the reason I always try to use business credit cards is, for one, it separates personal and business. For two, that utilization is not showing up on my personal credit report. And so I can use those credit cards freely. And now keep in mind that the business credit bureaus, they're reporting to business credit reports. So you really want to always watch your credit and never charge too much up. But what I find is keeping the personal credit score as high as possible is so important as real estate investors, because if you're utilizing DSCR loans, it's all credit score driven. So anyways, just food for thought. Hope you enjoyed this short episode. I'll link to some DSCR videos that you can watch that we've done previously. And as always, thank you for watching the Investor Financing Podcast.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.